Hello, I'm Paul Miller, a Senior Loan Officer at JMJ Financial. Each week I send out an email and do a video of 2 talking points designed to help my realtors educate people at their open houses. So talking point 1 is a quick recap of what happened to the rates, but I explain it at a 5th grade level because that's how I understand it. So the second talking point, it's a tidbit of general information that should be helpful to our clients and might even be helpful to you. So talking point number 1 this week, either the market has a real short memory or it got neuralized like the Men in Black movie. Now the stage was set Monday for a big drop in response to the lack of information on the healthcare bill over last weekend. Essentially, the markets were expressing their disapproval of Washington's ability to get things done. Then on Tuesday, Washington puts out a few news wires, and Speaker Ryan spoke at a press conference for a few minutes, and he suggested that the House might be able to get things done after all. Well, the markets were looking for anything positive, and so they went back to the same rates as Monday. So that basically brought us back to, you guessed it, the market being flat and doing nothing. Then the market got excited on Friday, but not from anything domestically. Remember that big deal last year with the Brexit, where Britain decided surprisingly to leave the European Union? Well, Friday marked the official inception of the Brexit. What basically happened was the United Kingdom submitted Article 50 paperwork. This technically started the Brexit. So this brought back some of the same fears as last year, and rates got nervous anytime there's uncertainty. Well, then later that day, the European Central Bank, it's basically the European Union of our Federal Reserve, released comments suggesting that the financial markets had read way too much into their last policy communication. Basically, they said, "Don't worry, we're not going to raise rates anytime soon." So everyone went back to, you guessed it, the same as last week. Now next week brings several big ticket economic reports. The most important one will be the job report on Friday. In addition, the Fed's going to release minutes from their most recent meeting. Now if the Fed notes give us more information about when they're going to raise rates, rates could pop up quickly. Now talking point 2, if you love junk mail, then just turn this video off. But if you want to stop the flow of junk mail, I have a great solution for you. I came up with this because my new homeowners would get a bunch of junk mail after their purchase. Initially, they would get a bunch of junk mail because various companies go down to the courthouse, they buy the names of all the new recordings from the county. You can't do much about that, but you can slow down a lot of the other junk mail that comes later. Opt-out pre-screen. So it's optoutprescreen.com. It's the official consumer credit reporting industry website to opt in or out of pre-approved or pre-screened offers of junk or insurance or credit cards, things like that. So you can opt out of it electronically and for regular mails. So it's pretty simple. So you're just going to click on the link that I put in there. It's opt out, and then you're going to scroll to the bottom of that page and you're going to click opt out and follow the instructions. So that's going to slow down the flow of credit cards offers, it's going to slow down the flow of junk mails, and it's going to save some trees. So I recommend opting out to all my clients. It's just part of the comprehensive consultation we do when we review your mortgage goals. So that's the quick update for this week, the 2 talking points. If you need a buyer qualified or just have a mortgage question, feel free to reach out to me today on my personal cell phone at 949-394-4442. Hope you have a great weekend.